Good morning. So I have been watching this stock for a while now, and it's been one of the relative outperformers since 2011, even 2010. But now it looks like it is the perfect candidate for a short sale, or perhaps a short sale. We're going to have to let the market tell us what to do first. But the stock is Zumiez. I don't know how to pronounce it too well, so I'm just going to say Zumiez. Symbol is ZUMZ, and they are a discretionary retailer. So what they do, they sell they sell clothing and apparel for like action sports, such as like I don't know, rock climbing, motorcycling, that sort of thing. So therefore, they lie in the consumer discretionary sector, which would be if we do the ETF XLY, which is just coming up very close to a resistance point right now. So they're not the leading sector like the staples or the utilities. I think, wow, even the utilities reversed. But if we go back to ZUMZ, let's actually take a look at the chart. So to get an idea of what the overall trend is, before even looking at the chart, let's just bring up the RSI. So in one of my previous posts, I was mentioning that when you're dealing with an RSI and when you're trying to identify a trend, you basically would say that if the market is using this upper level as resistance, like this overbought area between 70 and 80, and it's using the area around 40 to 50 as support, then it's bullish. But that means it's in an uptrend. So like right here when it gets very overbought, you see that was bullish, and that was actually when it went from 25 bucks to $30 in the course of 3 months. Now, if you move this down and you actually see it using this lower oversold bound as support, and it's using the only like 60 area as a resistance, then it's bearish. So just looking at it in a near time frame, if I move into a quick 6-month chart, we see that it has really been using this like 60 level. Even last time it used the 52 level, and then before that it was using once again using about the 60 level as a resistance point. So the trend at this point is it's a warning signal because we haven't gone below this lower line right here, but it's a warning signal that the trend may turn down. So let's get rid of this and actually draw some lines on charts. So the reason why I like this pattern so much is, well, let's see if you can see it. 3 seconds. So if you don't see it by now, I'm just drawing it. So the actual pattern, it is a head and shoulders pattern. So, and it may look narrow here, but it's because this area right here, it's just winding the area of the chart, so it skews it a little bit. So what we have shoulder there, we have a shoulder here, we have a downsloping trend line going from here, and then we have the head of the pattern. My bad. So if we actually measure top to bottom of this, and this is why I like it so much, it's in fact a pretty large pattern. If we measure top to bottom, project it from the neckline, it gives us a price target of just about 22.50. So basically what this trade is giving us, let's actually move in one more time to a 6th month, resize this guy so we can actually see our target. So if our target is right here, and it's sitting around 34.23 right now. So that would mean a break of this neckline would put us entering this trade anywhere below about 31.50. So we enter at 31.49. Alright, so we would enter at 31.49, which would be a break of the neckline, and then we would set our stop around, we could say, this gap would probably be a decent area. So that would put our stop just about 34 bucks. So stop around 34, and then we have a target of 22.50. So if we have a target of 22.50, that's giving us a expected gain of $9 per share. And if we have a stop at 34, that gives us a risk only about, like, I think that'd be $2 and yeah, $2.50 per share. So it's giving us a very favorable risk-reward ratio. Now, the reason why I recommend this trade today was because for the first time in about a week, notice this little thing up here, this ETB, it's become easy to borrow on the Thinkorswim platform. So before it was hard to borrow, so you'd have to pay an extra fee to do it. Apparently it's gotten some attention, there's been some more shares traded, so it's getting a little more liquid. So that's how we're going to do the trade. Look for a breakdown. If you want to do options, it's going to be pretty difficult not to really get ripped off by the market makers. Like, I would pick the February one. You see that the spread on this one is over 70 cents for the calls and over 80 cents for the puts, so either you do a short or a buy. It's not going to be good anyway. The November 35 call options, actually, the spread is a little bit tighter. If you want to do a naked short of one of those calls, you could do that. The puts, once again, gives you a bit of a problem with the spread. So if you want to trade this one, just do an outright short. Alright, thanks for watching. Happy trading. It's a very pretty pattern, but I don't expect it to happen all at once. So it's a long-term trade. Alright, thanks for watching. Happy trading.